You can be wrong 60% of the time in trading and still make money. Sounds impossible, right? It's not. If your risk management is correct. The greatest traders in the world are not profitable because they are good at winning, because they are good at losing. What I mean by that is when they lose small, and when they win big. That's why they are profitable. If you ignore risk management, the market will wipe out you sooner or later. But don't worry, because in this video I'm going to teach you everything you need to know about risk management. So without wasting any time, let's get to the point. So friends, there is a problem with my webcam whenever I started recording with OBS, so that's why I'm not able to record my face. So will be recording without face cam video until I fix the problem. So about this, let's jump into the topic about risk management. So I will cover these 5 points in risk management today. Make sure you watch the video till the end, because if you skip this video, if you miss any points that can put impact in your trading career, so make sure you watch till the end. So number 1 point is risk to reward ratio. In my last video I give an example of that, so let's look at that example. That a trader A has a fixed risk to reward ratio. A trader B don't have a risk to reward ratio. So let's see the result. First trade 500 rupees profit, then the both loss of 250, then last 500 profits. Overall PNL is in plus 500, and trader B wins 500, then loses 1000, wins 1000, loses 1000. Overall PNL 500 loss. So there is a famous rule in trading that whenever you win big, whenever you lose small. So as a trader you have to focus on risk to reward ratio. If you risk says 500 rupees to make 1000 rupees, you have an 1:2 risk to reward ratio like trader A. So that is called an ideal risk to reward ratio for a beginner. Then professional traders can jump into 1:3, 1:4. So main motive of risk to reward ratio is that whenever you lose small, whenever you win big. You have to focus on that point in order to survive in the game, and that is the first point of risk management, how to manage your risks. So that is what risk to reward ratio means. Second point is position sizing. Position sizing is very important concept in risk management, and every beginner should focus on that. Nothing but position sizing basically defines how much share you should take on a trade, and there is a formula you can calculate position sizing, and the formula is risk per trade divided by, this is ignored that this is problem, it is underlined but it is divided, risk per trade divided by entry minus SL. So this is the formula of calculate position sizing. So let's check an example. 2% of 10,000 rupees account. So this is you have a 10,000 rupees account and your maximum risk is 2%. So you should have defined your risk first. So 2% of a 10,000 rupees account, and your entry is 100 and your stop loss is 90. So you have 10 points stop loss. So 2% of 10,000 rupees is 200, and your stop loss and the minus came is 10. So the result came is 20. So 20 shares per trade. As a position sizing formula, you should take 20 shares in that particular trade. So every beginner should calculate the shares by focusing on position sizing. There is a toolbar in your trading chart, whatever broker you use, risk to reward ratio, and it's automatically calculate the position sizing, but I recommended beginner to calculate by themselves by using this formula. This is very simple. Number third point is trade with a stop loss. This is the most common mistake every beginner do, that they don't trade with the stop loss, and this is an absolute account killer. Whenever market turns against them, they started hope trading because they don't trade with the stop loss. Let's check with my example. I have a maximum loss of 500 rupees in a day. One day I don't trade with the stop loss, and whenever markets goes against me, I started hope trading that market gonna reverse that, but it don't reverse, and I have to book a loss of 2,700 rupees. That's what that's what market teaches you when you don't trade with a stop loss. So my advice to every beginners, and this is very very important in risk management concept, that you should have trade with a stop loss. So always trade with stop loss. Number 4 point is over trading and revenge trading. Overtrading and revenge trading blown many accounts than failure ever could. you should fix a maximum limit of loss and maximum limit of profit before entering in a trade. If your maximum limit of loss hits and maximum limit of profit hits, you should get out of the trade. But what most beginners do when their maximum limit of profits hit, they don't quit the market. They became greedy and wanted more profit and ended up being losing that previous profit also. That's what over trading means. And in revenge trading, when the market hit their stop losses, they wanted to punish the market but ended up being punished by the market. That's why they quit trading, because of the over trading and revenge trading. So in the concept of risk management, I add this because you should, as a trader, you don't have to do over trading and revenge trading. Fix the number of profit and number of loss, fix a limit of profit and limit of loss, and if this hits, you should get out of the trade for the day. Number 5 point is drawdown management. Drawdown management is basically the strategy you use to control, limit and recover from losses so your trading account survives long term. It's not about avoiding losses, it's about not letting losses destroy your account. So drawdown management is basically the percentage of your account falls. So if you have a 10,000 rupees account and you loses 2,000 rupees, so you have to calculate the percentage, and that percentage becomes your drawdown management. And you can use drawdown management to reduce your losses by following simple rules. So you should have fixed losing amount, that I will stop trading if my account is down X percentage. You should fix a daily and weekly loss limits, that I tell that 2 losing trades. You should take only 2 trades in a day. If one gets profit, you should book for the day, and if one get lost, then you take another day. 2 trades are a day, maximum 2% of risks. You should follow these kind of rules. And there's another rule that if your normal risk is 2%, that I tell, after drawdown you should risk 1%. By following these rules, you can use drawdown management strategy to reduce your losses. So these are my 5 concepts of risk management, and if you master these 5 concepts, you should never have to watch any other video about risk management to understand. If this video helps you to understand risk management, make sure you like it and share it with your trader friends. And subscribe my channel for more valuable contents about trading, finance and self-improvement. Always remember, you don't need to win every time in trading. You just need to control your losses. With that being said, I will see you in the next one. Till then, stay tuned.